Hi, folks. I want to talk to you about something that's been on my mind here recently, and it is when Wall Street names or defines a trend with some type of acronym or saying. It tends to be something to watch very closely. For instance, back in the day, back in 2006, 7, and 8, they had the term BRIC. The BRICS you would hear, which was Brazil, Russia, India, and China. These were the emerging markets that, could do no wrong, and they had every reason in the world why these were just going to boom and, you know, seemingly eternally go up and not go down. And so even ETFs were formed, which is EEB, which was the Guggenheim BRIC ETF, was formed, and the price went up for a period. But then the bricks that were leading the market and that were a focal point of the market, when they unwound, they had a massive crash that was even deeper than even when the ETF, for instance, went public. And then it does have a bounce, but then it's dead in the water for many, many years, and it never comes close to surpassing its peak. Now that it's been so many years since that last sell-off and peak, of course, it's been, a decade. And so now, of course, those assets are finally undervalued and starting to turn around. As a matter of fact, it looks like they're probably breaking a downtrend line right now, and there's a golden cross there. But that's aside from the fact. So the point is, when they name something like bricks, you want to watch them, because right now what's the latest grouping and naming is FANG, FANG, which stands for Facebook, Amazon, Netflix, and Google. And these FANG stocks are the stocks that they jump on the bandwagon and that can do no wrong, and they're the new latest and greatest, and they're the bullishness and the overly optimistic view gets so extreme that they get so focused and so much momentum and money going into this area that when they crash very, very hard. So these FANG stocks have been some of the stocks that have led the market in the latest bull market uptrend, and so you want to look for those to turn around and head south, and that'll be one of the big indicators that there's a dipping of the overall market and a downturn when those momentum leaders ducktail and turn downward. That's one of the big signs that money is exiting those stocks, which people had concentrated positions in and thought could do no wrong. And they tend to be some of the stocks that do the most damage because the retail public gets gets sucked into those stocks. So Facebook, Amazon, Netflix, and Google have a ton of retail investors in them that all they know is they're in them because they've gone up in the past, but they really don't know why they're in them from a fundamental perspective or technical perspective. They just heard a lot of hype on TV, and of course they're the new sexy stocks. So they are thrilled with owning them. But if you notice, for instance, Facebook here is very far extended away from its 50-week and especially its 200-week moving average, and that's a massive danger sign. And then if you look at Facebook on a daily chart, we've started to see some pretty decent sized reversals off of the most recent top. So it's kind of a blow off top here where it kind of gaps up and then it reverses down. That's a warning sign. Doesn't guarantee that we're at the top yet, but when you see those volatile reversals like that, it tells you that the institutions are quicker to hit the sell button and move a ton of money out because they're scared that the trend could be coming to an end. Also, notice how far the price is away from the 50 and 200-day moving average. So that's a negative as well. We just got a sell signal on the RSI and a little bit of divergence as this dips a little bit lower as this went higher. That's actually a bearish sign as well. And then the MACD histogram is slumping over, and we're probably not far from the sell signal there. So again, that's not a good sign for Facebook. Then you've got Amazon. So the A in FANG. Um, so Amazon is a mile away from its 200-week moving average. Had this massive spike up and reversal. Let's take a look at it on a bit of a more of a closer level. Big spike up and turn around, and it closed the week much lower, which produces this very long wick. This very long wick at the top is a very bearish signal. Sometimes you'll find long wicks, near the market topping periods, and so this is one of them. It doesn't guarantee that it's at the top, but it increases the likelihood of it big time, particularly since this is happening where it's way away from the 200-week moving average. If this happened and it was just, the price was right here and it was close to the increasing moving average, I wouldn't think much of it. But with that happening, with it being a mile away and a MACD sell signal and selling volume picking up, which is much bigger than average weekly volume, and RSI dipping, coming out of oversold, those are all negatives for Amazon in the big picture. And there's so much bullishness in the news for Amazon stock that the retail investor cannot see a day where Amazon would ever miss a beat. So they assume that translates into their stock price just eternally going higher. And there comes a point where the most bullish case scenario is already baked into the cake. It's already factored into the price of the stock, and there's a huge chance that we're there with Amazon stock. So it doesn't necessarily mean that it's a bad company. It means it's an extremely overpriced company. And you could easily see a stock like this that is this overpriced go from 1,000 a share to 500 a share and cut in half very easily. And I know at the time when the news is so bullish, you'll probably have about 10% of the people believe that, if that. But nonetheless, it doesn't keep it from happening. So Amazon just looks atrociously. It's just the risk is super high on the weekly. And then on the daily, look at this huge reversal that we had here and a gap down lower that was never completely filled back. That's all net selling and a lack of buying and just all kinds of warning signals in and of itself there. And then it has kind of an indecision day, and then it gaps. I mean, it not gaps down, but it heads down lower and closes lower and only recovers just a little bit of it as of the following day. All negative signs. Look at the selling volume here. That is about 11 million shares net sold in a day, when the average trading volume for Amazon is along the lines of 4 to 6 million. So anytime the selling volume is 2 to 3 times average daily volume and the price is way away from the 200-day or 200-week moving average, it is worth taking note. So also there's divergence here and a sell signal on the MACD, and scroll up here to the RSI has plummeted as well. So that's the A in FANG, and it's looking weak. So let's go to Netflix. Netflix is a stock that's a mile away from its 50 and 200-week moving averages. It had a blow off top, which towards the end of wave fives and towards the end of the bull market run, you'll have this. Many times you'll have a surge that can happen in some of these stocks that appears initially very bullish, but it's actually a very negative sign. It's like the height and the peak of mom and pop investors piling in right at the very end. It's a very negative sign. And you're seeing divergence on the RSI and also it being overbought. And I said oversold on one of the previous charts earlier, and I meant overbought. Mile away from its 50 and 200-week moving averages, and divergence on the MACD as well. So again, not looking good there on the weekly. So let's look on the daily. On the daily, you've had this, that surge, that gap up and run up that we talked about on the weekly, and then a big reversal day right here. See this big red bar here as this comes out of overbought, and again a negative sign because it's far away from its 50-day and 200-day moving average, as well as what we saw on the other chart, very far extended away from its 50 and 200-week moving averages. So very dangerously risky. The potential for selling versus buying and the potential for losses to outweigh gains at this point are statistically against the buyer of the stock, and so the risks are enormously high in Netflix. And we're basically just about at another sell signal here. The RSI has come out of overbought, so things are looking not so hot for Netflix. So that's FAN, which is Netflix. Then we got the G, which is Google. Google's got a couple of symbols, but we'll go with GOOGL. It's one of the more common, one of the two common ones. So it's bumped up here against this 1,000 round number and struggled at it, and had sell off several times at it. That's worth noting. The RSI is coming down. That's worth noting. The price is still far away from its 50 and especially its 200-week moving average, which shows a lot of high risk. We're already in a MACD sell signal, and the selling volume's kicking up. So not a good sign for Google. Again, it's not that any of these in and of themselves are bad companies, or that the companies are history or going to go down the tubes, but the prices of their stocks have gotten so far out of whack with the most optimistic estimations of what they can really do. Much like housing in 2006 and 2007. Housing in 2006 and 2007 was going through the roof. It could do no wrong. Did it mean that, the house was still good, the land was still good, the neighborhoods were still good, but the price had gotten so far out of whack. It was so far above any of the most optimistic estimates of what the land and house and neighborhood should really be worth, and it came crashing down in latter 2007 and notably in 2008. We all remember that. So that's why I use it as a illustration. Well, a lot of these stocks are in the same scenario that housing was back in 2008. They're at these very extreme, stretched, risky, high PE, overvalued situations, and that is going to turn and head lower. So we may be in that turning over period now. Again, it's too early to confirm it for sure just yet, but I'm watching these FANG stocks, and you should too, because they'll just be one more indicator of a turning market, because the stocks that lead a market on the way up tend to be the ones that also lead the market on the way down as well. So that's why you want to watch those. Notice also in this daily chart where this basically comes to the 1,008 and 1,006 area here, so roughly the same area. This RSI diverges quite a bit. The selling volume here is extremely high, 6 million shares net sold in a day, when the average volume is around 2.5 million shares net traded in a day. So when that happens, and big gap down here that was never filled. So when that happens, it's worth noting, particularly when it's far away from the 200-day and 200-week moving averages. We're already in a sell signal here and a massive divergence here on the MACD as well. So lots of indicators pointing to a potential turning down in these FANG stocks. And and keep in mind the news lags. So you can't use the news. A lot of people think, well, when the news turns negative, I'll sell these stocks. By the time the news turns negative, you're well into the next downtrend in these stocks. So news is a lagging indicator. When news turns positive, it's usually too late to buy, because the asset at hand is usually at least fairly valued, and many times at least slightly overvalued. And when the news turns negative, you're far past the peak of the best selling points, and usually it's lagged so bad, because think about it, news comes from reporters, and reporters aren't aren't market researchers or analysts. They're simply reporting what is happened or what has happened. They don't have a way of knowing what is going to happen because it's not their expertise. Their job is not to forecast prices. Their job is simply to report on prices. And that's what they're doing, and they do a good job at that. But when you take reporting on prices in the financial news media with investment advice and take that as one and the same, that's where that's a huge, huge, huge mistake. And that's what the retail public does so much of. They use that as their sign of whether they should get in or whether they should get out. And that's why they're buying Amazon hand over fist right now. And it's the dumbest thing they could be doing. But yet the news is so bullish, they think it's the most reasonable thing to do when it's the most outlandish thing to do because they're buying. It's like buying housing in late 2007, early 2008. So watch these FANG stocks, Facebook, Amazon, Netflix, and Google, for decisive turndowns and breakdowns of uptrends, breaking below 200-day moving averages, breaking uptrend lines, selling volume picking up, further divergences in RSI and MACD, etc. All these will be signs that things are turning lower and a market rolling over. So thanks so much for watching, and God bless. Bye-bye.